Hello and welcome. In this on-demand webinar, OJM Group Partner, Carole Foos, CPA, shares practical tips for medical practices as they reopen under the new normal and provides an update on PPP loans. Carole and her partners at OJM are the authors of 12 books written specifically for doctors, including our newest book, Wealth Planning for the Modern Physician, Residency to Retirement. To get your free PDF or ebook download, text OJM Web to 555-888.
So I'm sure many of you, I hope, were able to obtain the Paycheck Protection Program forgivable loan that was made available under the CARES Act. And there have been 2 rounds of funding for that. At the time of this recording, the second round still has some funds available. So what I wanted to talk to you about partly today is this loan and what you need to do now if you have received the loan, or maybe if you're even just applying and in hopes of receiving it. I want to help you know what to do and how to document and how to maximize forgiveness on that PPP loan. So many of you may have been reading a lot recently in the news about the good faith certification for these loans. I'm sure you're aware there were some large public companies that were able to apply for the loans due to the way the law was written, and many of those have since given the funds back, and that did bring about a lot of press on, what are these loans for, who should be receiving them, what will the SBA be looking at later on in terms of potentially auditing these loans. And they've come out and said they will audit them. They may assess criminal and civil penalties if you applied for a loan and received one and you shouldn't have. So in terms of justifying your good faith certification that due to economic uncertainty, you needed the loan to continue operations, I think it's going to be important to have some financial projections that you would have made. Had you not received the loan, what would that financial picture have looked like for your practice? Perhaps an inability to retain employees and to cover operating expenses. What the loss of revenue would have done in terms of your ability to cover expenses. What you would have had to do in terms of dipping into other funds that would have been detrimental to operations. The certification was not that you had to go bankrupt in order to obtain this fund. So if you, for instance, would have had to dip into your retirement savings or take another mortgage on your house in order to continue to pay your employees, note those things, document them, and save them to a file. You can document the uncertainty of your accounts receivable collections in light of the economic environment that we're currently in. Now, just recently, actually on May the 13th, the SBA did come out with a brand new safe harbor. They said that any loans that are under $2 million will have a safe harbor from civil and criminal penalties on this good faith certification. So that probably will apply to most of you. They have, however, said that doesn't mean they're automatically going to forgive those loans. So they will still look at the forgiveness. And again, I do think just in terms of justifying the forgiveness of them, you're also going to want to have some of this documentation. So make sure you're assessing your economic need both at the time of the application and through May the 14th, which was the end of the safe harbor period for returning the money. Document your files. More important than anything, because if you do get audited a year from now, 18 months from now, it's going to be hard to remember then. So make sure you've got documentation on some of the things I mentioned. And the SBA has also said they will do automatic audits of loans over $2 million, but they will do some audits of the loans under $2,000 or $2 million as well. If you recall, under the Paycheck Protection Program, the covered period for these loans is from February 15th, 2020 until June 30th, 2020. The 8-week period that you're allowed to use for eligible costs that can be forgiven begins on the date you receive the loan proceeds. So many of you, I'm sure, are within that 8-week period already. Make sure you're tracking your total eligible costs incurred and paid. Now, I'm going to step back for a moment and state there's new guidance coming out on these PPP loans, every few days. They have still not fully defined some of the terms in the law or what they interpret the terms in the law to mean. So stay up to date on that. Please talk to your CPAs about it as this goes on. We don't know for sure what incurred and paid means. What many, including the AICPA, have said is they believe it does mean expenses incurred and paid within that period. You're not going to be able to prepay, the next 6 months of mortgage interest and have that count, or the next 6 months of rent. Things like that, they're really looking for expenses during this 8-week period. In terms of what the eligible costs are, employee compensation is a big part of this. That includes salary, wages, and commissions. It includes bonuses. The maximum per any one employee that you can count for this 8-week period is essentially $100,000 annual salary divided by 52 weeks times 8. So that comes out to $15,384 per employee. You can include any allowances you pay for separation or dismissal. You can include employee benefits that the company pays for, your group health care. Again, not clear guidance on this, but most seem to think that will include medical, dental, and vision insurance premiums. You can include retirement contributions that the company pays, state and local taxes assessed on employee compensation. So not federal payroll taxes, not your share of federal unemployment or FICA tax or Medicare tax, but any state unemployment taxes or state workers' comp taxes that the employer pays can be included as a payroll cost. One thing you might want to do, depending on when you got your loan and how that 8-week window looks for you, you may need to run a manual payroll. So let's just say, for instance, you have a monthly payroll and your payments are on the 20th of the month. If your 8-week period doesn't end until June 30th, you may want to run another payroll on June 30th to get those last 10 days of compensation and have those paid during your 8-week period. So another thing to talk to your CPA about and talk to your payroll service about. In addition to the payroll costs, other eligible costs include mortgage interest on real and personal property as long as the mortgage was in existence prior to February 15th of this year. It includes rent under a lease in effect prior to February 15th. Now, again, we believe this includes a lease both on real property and on equipment. That has not been fully determined or defined. It likely does not include common area maintenance charges other than utilities. So if you're in an office building where you get those CAM charges and you're paying a set fee based on square footage for maintenance costs for cleaning, et cetera, you probably need to look to your agreement and determine what amount of that is being paid for utilities. We think that utilities will include payments for electric, gas, water, telephone, and internet service, again, as long as those services were established as an expense of your practice prior to February 15th. And it also includes any of the EIDL loans that you may have gotten and that you're going to refinance under this program. Now, keep in mind, one of the greatest benefits of this loan, certainly it's got a low 1% interest rate, which is nice, but principal can be forgiven and up to the full amount of principal can be forgiven. But there will be a reduction in the amount forgiven if your full-time equivalent employee headcount has dropped, or if there's been a reduction of employee salary of greater than 25% during this covered period. So again, covered period, February 15th to June 30th. And there's an exemption for those if you rehire employees by June 30th. So mathematical equation for those average full-time equivalent employees, you're going to look at the average per month during this covered period, divide that by either, and this will be your choice, the average full-time equivalent employees from February 15th to June 30th of 2019, or average full-time equivalent employees per month from January 1st to February 29th of this year. So you can determine which of those periods you use the one that's more beneficial for you to get the most forgiven. In terms of, calculating and documenting your costs for this PPP loan forgiveness, first of all, calculate your payroll costs during the 8-week period. At least 75% of the loan must be used on payroll. Again, payroll includes compensation, bonuses, health care, retirement, state employer payroll taxes. It does not include payments made to independent contractors. Independent contractors needed to apply for their own loans under this program. If less than 75% of the proceeds of the loan are used for payroll, your forgiveness is going to be reduced by the amount that's under 75%. So if you want to calculate that, take your payroll spent during the 8 weeks, divide it by 75%, multiply that number by 25%, and that will be the allowable amount of non-payroll expenditures for debt forgiveness purposes. You're also going to want to calculate any percentage decrease in your full-time equivalent employees. So for instance, if your number of full-time equivalent employees dropped by 15%, you're going to lose 15% of your loan forgiveness. So if that's the situation, then the most that could be forgiven would be 85% of your loan. We believe the number they will use in terms of number of hours for a full-time equivalent is greater than 30 hours. Again, that's not been stated, so that could change. Presumably, if you have part-time employees who work under 30 hours, you would divide the number of hours they work by 30 to determine what fraction of a full-time equivalent employee they are. And again, these might be calculations you want to have your CPA help you with. We believe the full-time equivalents that they're looking at will be the average over the 8-week period. And they have come out and said in the guidance from the SBA that if you made a written offer to an employee to return that you had furloughed and the employee rejected that offer, presumably because they're either making more on unemployment or for other family reasons, that reduction will not count against you in this calculation. So you are also going to want to calculate any reduction in payroll of greater than 25% of the prior quarter. That's going to apply to employees who don't receive an annualized pay of more than $100,000. It's going to apply to employees whose primary residence is the US. So if you reduced employees making over $100,000 by more than 25%, you should still be okay. If you reduced non-US residents pay, you're okay. It does seem to apply on an individual employee basis though. So you're not looking at your whole payroll and saying, okay, I didn't reduce my entire payroll by more than 25%, I'm okay. You're looking at each individual employee, I believe. And what you want to say is, was their payroll during the covered period more than 25% less than the previous full quarter? If so, you're going to reduce the forgivable amount by the reduction that exceeds 25%. So if I reduced payroll by 30%, I've got a 5% reduction in my forgivable amount. Again, calculate the adjustment because your full-time equivalents and or their salary were restored by June 30th. If you meet the criteria for restoring, you don't have to worry about either that full-time equivalent or the 25% reduction. Very confusing, a lot going on. There's been a lot of guidance coming out. You can go to the frequently asked questions on the SBA's website, or again, reach out to your CPA and talk to them about it. For independent contractors and for the self-employed, again, they didn't come out with a lot of rules until well into the application period for the PPPs. So I do want to touch on this for those of you who, first of all, for sole proprietors or disregarded entity LLCs who file a Schedule C. If that is how your practice is taxed and you have no employees, your loan amount will be based on your 2019 Form 1040 Schedule C, line 31, which is net income, up to a max of $100,000. You divide that amount by 12, multiply it by 2.5. That's the maximum amount of the loan you could have received if you have no employees. Your forgiveness will be that same 2019 net profit times 8 divided by 52 for payroll. Now, you can also, if you've got rent and you've got, or mortgage interest and utilities, you can also add that to that 8/52 number for payroll. A Schedule C with no employees does not count retirement or health insurance as an addition for payroll costs. At least that's how the guidance is written right now. A Schedule C with employees can count the employee's payroll plus retirement plus healthcare for the employees. For yourself, you're only counting that portion of your net profit. Again, mortgage interest, rent, and utilities will be based on your 2019 Schedule C. Deductions can include prorated home office deduction, it looks like. So if you took a home office deduction on your 2019 Schedule C, you can look to that for the amount of utilities, rent, mortgage interest, et cetera, that you can deduct. For partners and partnerships, you will want to look at your Schedule K1, line 14A, which is your net earnings from self-employment. That's going to be reduced by Section 179 deduction, unreimbursed partnership expenses, and depletion. You'll multiply that by 0.9235. And then again, the max for partners and partnerships is also up to $100,000 per partner. Partners and partnerships can also include their 2019 gross wages paid to employees, as long as they're U.S. resident employees. They can include employer contributions for employee health insurance, employer contributions for employee retirement plans, and again, those state and local taxes on employee compensations. So keep in mind, this guidance also came out sort of into the period of applications. Partners or members of LLCs are not permitted to obtain PPP funds based on their self-employment income from a partnership or LLC. They needed to be included on the partnerships application. And again, many partnerships had already applied and potentially even received funds, not including their partners, by the time this guidance came out. For S corporations, owners' W-2 wages are included up to $100,000 annually. So again, that 8-week period of that will be included for the forgiveness. Owner distributions are not included. Employee healthcare and retirement contributions can make their annualized compensation greater than $100,000, but it seems that employer compensation in total cannot be greater than $100,000. So also, you're going to want to be looking at those Fica tax credits. There's a refundable employer Fica tax credit if you're paying sick leave or family leave under the Coronavirus Acts. There's also an employee retention credit of Fica taxes for businesses forced to close or suspend. Keep in mind, for any wages that you're claiming these Fica tax credits on, you can't also use those same wages for your PPP loan forgiveness. So again, if you're affected by these, either taking the employee retention credit and or paying family or sick leave under the Coronavirus Act, talk to your accountant about that and do the calculations of, how you're going to use those PPP loan forgiveness costs versus the Fica tax credits. Also, just in terms of what you may have done because your practice was either greatly reduced in what you could do or shut down completely for a period of time. If you reached out to get extended payment terms from vendors, it's now time to probably touch base with them and update your status and determine how you're going to make those payments now or what the period of time would be. Contact your bank if you extended or changed any loan repayment terms. And again, figure out what's going to be best. Is it now time to consolidate some loans, maybe get a better interest rate, or how you're going to work out with the bank to start repaying those. In doing that, certainly be cognizant of when your revenue will actually start coming in the door from your insurance payors. What's your lag time on that? And be aware of not overreaching in terms of starting your repayments. Reach out to your CPA regarding any loan forgiveness calculations. So for the PPP loan, also if there's been any loan forgiveness from your bank, you're going to want to talk to your CPA about that. And talk to your CPA about estimated payments for 2020 that might have already been calculated for you, which certainly might change now with a change in revenue. And I think it's a great time to contact your investment advisor regarding restarting any savings plans that you might have put on hold while your practice revenue was down. I hope that this has been helpful. Again, we do want to offer all of our ViewMedi webinar viewers any of our books for free. That new book, Wealth Planning for the Modern Physician, Residency to Retirement, I think will be very helpful to you. It covers various wealth planning topics throughout your career. And we do want to let you know that this commentary is not intended to be personal, legal, tax, or accounting, or investment advice. Please contact your personal advisor for specific advice. Again, certainly with the PPP loan, the guidance is changing almost daily. Reach out to your advisors. I hope this has given you some general knowledge that will at least provide some good questions to ask. Thank you for listening.
OJM is a multidisciplinary wealth management firm. We have worked with over 1,500 physicians throughout the country. We would welcome the opportunity to speak with you about how we might be able to bring value to your wealth planning. As I mentioned at the beginning of the webinar, OJM partners have authored several books, all of which are available to webinar viewers at no charge. You can get a free PDF or ebook download for Kindle or iPad by texting the code on your screen to 555-888. You can also visit ojmbookstore.com and enter the code at checkout. Due to COVID-19 restrictions, we are temporarily unable to fulfill orders for print copies of our books, but we'll make this option available as soon as possible. In addition to a free book, OJM Group also offers webinar viewers a complimentary consultation where we can answer your questions and see if our firm might be a good fit for your situation. Visit ojmgroup.com or call 877-656-4362 to schedule a free consultation. Enjoy the free copies of our books, and we hope to have the opportunity to speak with you. Thanks for watching.